very rough trading day today, down 47.50 on the day in the stock index portfolio for 4 micros, 200K, and down 1,300. We were at equity peaks on Monday, so that helps buffer it for the month. Minus 1725 and minus 700 on this for the month is part of the normal ebbs and flows. We made a video earlier about the difficulty of the short side since May, and we're down on the week as well. So down on the month, that's the main number that we look at, and so this is a drawdown alert. So the cycle is there. So let's take a look at the trades on the day and go over what happened today. It was FOMC day, 2 days in a row where you see this type of price action. Seems a bit predatory. The market sells off, rallies to highs, and then sells off again. Gap continuation, and then it rallies, takes out the highs, and then rolls over again. And so cover 3 actually was profitable. S&P strategy, tick fader was down on the day. 60-minute breakout was up on the day. Captured this short overnight. Got short again, reversed the long side, hit the profit target on the long side, got short again, short going into tomorrow at the close today. Momentum reversal. You see what happened on the FOMC minutes. FOMC minutes are not typically, it's typically a non-event, a reiteration of what we knew from the FOMC meeting a few weeks ago. But lately it's just everything's hypersensitive. And the market seems to be, to me, it looks like a buy the lie, sell the truth type of a market right now. Technically bullish, fundamentally bearish, big divergence there. It's tricky. Waiting for the balance sheet tomorrow as well. Everyone knows that the Fed's balance sheet, I'm going to draw a graphic of that. It had done this. It was at about the $4 trillion level, $4.5 trillion. And then after the pandemic, it did this, and then inflation did this. Today, inflation hit 10% in Europe, UK, 10% inflation. And that was the report today. Natural gas is soaring. And so we have the Fed's balance sheet, and the promise is to reduce the balance sheet. Everyone knows that the Fed has not reduced the balance sheet as much as they said they would. Everyone knows that if they do accelerate the reduction in the balance sheet, it will also take the market down. And so, they haven't done it yet. And so, you just wonder why they're taking so long to do this. They seem to favor equities, and instead of, they're supposed to be a neutral player in this event, and so they're really favoring equities. They also will historically do surprise rate cuts, which helps the market go up, but they never do surprise rate hikes. And so the rate hikes would make the market go down. They never do surprise rate hikes, the current Fed, but they will do surprise rate cuts, which makes the market go up. So there is a bias to the long side, and the Fed is stubbornly not following through. And it does add the liquidity. The meme stocks are raging again, and so it makes it very hard to short the market since May, and it's unnatural. This price action is unnatural. Should be a more neutral market without the hand of the Fed tilting it to one side or the other so much for so long. And so here is the NASDAQ. NASDAQ gap continuation stopped out, reversed. Gap continuation 2022 reversed, rallied up here on FOMC minutes. Not sure why. Tick reversal. Got short, then got long. Just a sloppy day, tough day. Tick pulse, stopped out on the short side, overlapping Q. We had some nice shorts going. The market was due for a correction. All the liquidity, though, gets to jump in and run the market up unnaturally. Covered 3. When you short the market, when you go long and short, there are times when the market reverses, stops you out. But this is happening just almost every day. And so there's no cycle to the downside. There's no natural cycle to the downside. The close is near the open on the NASDAQ. On the S&P, the day session close is higher than the day session open on a down day. So let's look at, momentum reversal. Had a small gain. VT-NQ stopped out. Parabolic NQ stopped out. And so all these short trades were stopped out on this FOMC minutes, which is typically, this acted more like the FOMC meeting. The FOMC minutes are not supposed to be, so sensitive. But, we're in mid-August, and, liquidity, maybe, in August, crazy things can happen like this, but we are trading a set of strategies that do well historically. So that's what we're looking at, and today was a normal down day, and still looking for a cycle. We made a video earlier about the cycle of shorts being very challenging, and so it's pretty extreme since May for the short side to not work so well, and so we are due for a cycle on the short side. Requires a lot of patience sometimes, but we are in a drawdown alert. I'll have the portfolio calculator updated for the normal, for the drawdown, and send that out as well. So equity peak on Monday, drawdown alert today in this fast cycle of trading.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.